Hello and welcome to Commodity Champions. I'm Manisha Gupta, and the gold prices have notched another all-time high this week, both globally and in India. In the past year alone, the prices have surged by nearly 20%. A weak US dollar and expectation of interest rate cuts are among the factors that are spurring the rise. A demand for the safe haven asset is also supporting silver prices, which are near 7-month highs. To discuss the outlook on gold prices, I am now joined by Philip Newman. He's Managing Director at Metal Focus. Philip, thank you so much for joining us. What's your sense really on the kind of price moves that we've seen? I mean, it has been very volatile. We've seen $50 to $100 of a move coming in quite easy.
Absolutely. And well, thank you for having me on your show again. So I think, what we saw last week was, I think, quite thin trading conditions, driving prices, of course, to new highs. And I think that's been reflected in how quickly the prices come down over the past day or so, although of course, still holding above the $2,000 level.
So, Philip, what's your sense on where the buying is coming in from in sense of gold? I mean, we do understand that the ETFs were short. The funds have just about started to buy again. Are you looking at more interest going forward at these current levels from there?
I think there will be perhaps some concern about how high the price is. But I think when we think about the reasons why it did, shoot up and has remained strong for some time now, is that there are considerable expectations among a range of different institutional investors that the Fed will pivot, that the Fed will quickly change course early next year, and will start lowering rates much more quickly than the Fed has said it will do so. And I think while you see quite a separation between what the market expects the Fed to do and what the Fed says, that will continue to attract investors even at these levels.
Philip, do you also belong to the a group which expects that we could be looking at higher highs in case of gold in next year? I mean, on a conservative level, people are talking about 2050, and then there are reports about 2400, even 2500 for that matter. Do you see that much bullishness in the 2024?
I'm afraid not. In terms of our base case, we feel that you're going to see echoes of part of this year when the market, in our view, will gradually move towards the Fed position. At this point in time, we see no reason why the Fed will alter its course of really remaining hawkish for much of 2024. And so we don't think that rates will be cut until very late next year. And so under that scenario, as the market moves towards the Fed's position, we think, in fact, you're going to see liquidations by investors, and then that will gradually weigh on the price. And so we think that it will gradually weaken and actually head towards the 1900 back down there, and then head back towards the $1,800 level as we move through 24.
All right, so it promises to be quite uncertain going forward from here. The one thing that has been supportive, Philip, has been the global central bank buying. How are you reading into that?
Very much so. I mean, I think you hit the nail on the head. I mean, last year was a record high on a net basis around the 1080-ton level. And already on a net basis, over the first 3 quarters of this year, we've already hit 800 tons. And that's really quite impressive because the early part of this year, the first 3 or 4, even 5 months, there was quite considerable selling by some central banks. A very small number for very specific reasons. But the fact on a net basis, we hit 800 tons, I think is quite impressive. So it's quite possible that for, when we actually early next year and we look at Q4, we could be looking at another record high for 2023 on a calendar year basis, which is quite remarkable on where we saw the figures last year.
With the kind of volatile moves that we are seeing, Philip, do you see that impacting physical buying, especially from India and China?
I think absolutely. I think the one thing that jewelry consumers don't want is price volatility. We'd already seen Indian consumers approaching the festive and wedding season, I think, in quite bullish mood. We saw that amongst the trade as well. But I think at these levels, I think there's going to be considerable concern. I think, if prices were even to settle in dollar terms, let's just pick a figure. Say they were to settle around $2,000. Yes, that's exceptionally high. But if they have that price stability, then that can encourage consumers to come back to the market. But if you've got prices remaining really volatile, then that can really undermine demand. And I think that will be a concern, given, of course, the important time of the year that we're in, especially in India.
Oh, well, absolutely. There has been a big volatility in the prices here. But thank you so much, Philip, for joining us and making sense of what's moving in case of gold prices. As you said, the global central banks is something that we'll need to watch out for, but the prices perhaps may not sustain at all-time highs going forward in 2024. Thank you so much for joining us at CNBC TV 18. Let's shift focus from gold to other precious metal, which is silver. And joining me now to talk about that is Michael DiRienzo. He's Executive Director at the Silver Institute. Michael, hi, thank you so much for joining us. And silver is yet another metal which has seen strong gains in last 1 year. What's your sense on where is this all demand coming in from?
Well, the demand is really coming on the industrial side. We put out a report just this last month on the 15th talking about how we saw the market basis our April launch of the World Silver Survey. And, we're happy to report that we think there's going to be another record demand for industrial silver this year, taking it up to about 632 million ounces. And the key drivers obviously are very strong investment in photovoltaics, power grid, and 5G network investments, as well as growth in consumer electronics, and of course, rising vehicle output with respect to electric and hybrid vehicles.
Michael, last year was a good deficit in case of silver, and this year as well, you have been advocating or projecting one. What is it that the street rally seems to be thriving on in sense of investments? Are you looking at a big number there in sense of deficit?
Yeah, we had, I think it was like 92 in 2021, over 250 million ounces in 2022. And this year we're calling for another significant deficit of about 140 million ounces. It's a little bit lower, obviously, than 2022's all-time high, but it's still elevated by historical standards. And our consultants at Metals Focus firmly believe that this is going to continue for the foreseeable future.
So in that sense, Michael, how would you look at the prices going forward? I mean, we've seen a good 25% increase in the Indian markets for silver in the last year. What is it that the range that you're looking going forward?
Well, we think the average silver price is going to increase by some 6 to 8% this year, on average, to be about 23.10. But these last few weeks have been quite extraordinary for the precious metals complex with respect to gold and silver. I mean, we're looking at about $25 silver as we speak this morning. And like I mentioned, they've grown about 8% year on year. And we are firmly in the camp that this is going to continue into 2024. And we're very not only optimistic, but we're also very happy about the strong fundamentals of the market and where that's going to take us with respect to the silver price next year. But we're happy we had an increase this year, and we're looking forward to a very, very strong 2024.
All right. And how would you look at various factors and fundamentals impacting silver? I know gold-silver ratio is one way to look at it, but the safe haven buying that the gold has seen also has supported silver. The base metal prices have begun to pick up as well, and there's anticipation that the interest rate cuts in the next year could also be supportive. What are the fundamentals that you think are more important?
Well, you pretty much hit the nail on the head. Look, we think that the U.S. Federal Reserve, for example, has not only paused interest rate increases for the remainder of this year, but will start in early 2024 to even cut or lower these really, really high interest rates. So we think that's going to be a boon for silver down the road. We look at the dollar, it's starting to lose some of its impact overseas. It's starting to lose a lot of its impact here. And, while inflation has been tamed to a certain degree, I think the average consumer in the United States is still feeling a pinch when it comes to the basics, energy bills, food, gas, and whatever, home prices and so forth, are really going to lead in favor to all precious metals and silver, of course. So again, we're very optimistic about that going forward.
All right, so more optimism in case of silver rather than gold, and an 8% on an average return is what silver could give you in the years to come. Michael, thank you as always for joining us here at CNBC TV18 and giving a sense on where silver prices could be headed in 2024. On that note, it's time for a break, but don't go anywhere. We speak to Ole Hansen of Saxo Bank on metals, crude, and of course, agri-commodities. Welcome back. You're watching Commodity Champions. Before the break, we were discussing the outlook on silver and gold prices. Let's bring in another view on the same. We have with us Ole Hansen, who's the head of commodity strategy at Saxo Bank. Thank you for joining us, Ole. Let me start by with the gold itself. And we have seen an all-time high and a huge run-up, a jump of nearly $300 per ounce in less than 2 months, and a jump of $50 to $100 per day seems to be becoming a new norm. How are you reading up on this commodity?
Clearly, first of all, a commodity where there's suddenly quite a bit of FOMO, fear of missing out of the rally. The drivers we're all familiar with by now. We've seen dollar weakness recently. We've also seen a sharp rally in U.S. bond yields, bond market, driving down yields by the most in many years. And that's really the signal that many traders have been looking for. The only problem right now, and we saw that also in the way that behaved in Monday trading, was simply that we rallied too far and we saw some profit taking coming into the market, because the biggest challenge just in the short term is simply the fact that we have priced in 5 rate cuts next year. And that's really a tall order, and that leaves the market exposed to disappointment. So it's going to continue to be a volatile start to 2024. But overall, I think we could still see higher prices.
So, Ole, what are you expecting in sense of price moves? Because there are various reports projecting anything between 2,000 to 2,500 in next year. Not many people are bullish though, but what are you projecting?
Well, as you know, Manisha, I'm always quite reluctant to talk about levels, because they obviously change from 1 month to the next. But we've been looking at 2,300 as a target that could be reached relatively easy, simply because when we start to get these rate cuts, and I think they will happen probably faster than late in the year and next year that the market's been anticipating, simply because we're not going to see rate cuts ahead of the U.S. presidential election. So if the Fed wants to cut rates, they'll do it relatively early. But and with that in mind, perhaps 2,300 could be a good target next year.
And Ole, what's your sense on silver? Because we hear market talking a level between 28 to 32 for the next year. Here as well, strong industrial demand and of course a deficit in silver are some of the supporting factors.
Well, looking at silver and what we're seeing with silver and platinum once again is that when we get these big moves in gold, both silver and platinum, they struggle to keep up with the pace. But as soon as things settle down, the traders start to look for relative value. And I think looking at 2024, and especially looking for the outlook that we have for green metals now that we had COP28 in the Middle East unfolding, I think there will be a doubling down on the initiatives in that respect. That will support copper. That will also support silver. And with that in mind, wherever gold goes, I think silver will follow and perhaps even outperform.
So when you talk about outperformance, would you want to give any price projections on silver, platinum, even copper for that matter?
No, I think from an outperformance basis, I think silver potentially could outperform gold, but somewhere between 5 and 10%. So I think that's I tend to look at that on a relative basis. And platinum right now, it's $1,100 discount to gold. I see no reason why that discount shouldn't come back down to the 600 to 700 area. So potentially good outperformance as well.
All this hasn't been a very strong year for industrial metals. I mean, last couple of months, we've seen some support, and the metals definitely have seen support from the 2023 lows. But how would you look at many of these metals in 2024? Do you believe that these current levels are good for accumulation?
Well, I think the market is starting 24 with obviously with first of all, great deal of confusion, because the economic outlook for China still doesn't look great. But at the same time, there's also some stimulus potentially coming that could underpin prices. But one thing we know for sure is that the green transformation is gathering momentum. And we also just recently seen that the supply disruption at the big mine in Panama, raising some supply worries as well, at a time where we are going to see increased quantities of some of these key metals in the years to come. So not only are we expecting demand to remain firm for key commodities, especially copper, but with the supply risk adding an additional dimension, I think there is a good foundation for a rally in copper as well next year. So basically, I think at this point, 2024 is potentially building up to become the year of the metals, more than we've seen this year, where there was a lot of focus at the energy market, but that will probably be a little bit more challenged as we move into 24.
All right, that point is well taken. And to the energy space now, there are clearly so many conversations happening about energy transition, but we know that fossil fuels will continue to be the main focus. At this time, when there is a slight surplus building, what's your sense on prices?
Simply that we have gone from OPEC Plus being in control because the market was very focusing on supply to them losing some of the grip because of the demand outlook has started to show some signs of softness. And that basically means we are drifting low at this point. The OPEC Plus meeting last week did not really give a great deal of confidence in the group's abilities at this point in time. But overall, I think that there is a line in the sand which will be defended. It's probably somewhere below in the $70 to $75 bracket. I really doubt that we are going to see prices being allowed to follow through that or drop through that kind of area. So overall, we not really changed our outlook much. We're still looking for oil to stay predominantly in the 80s next year, at least at the beginning of the year. There will be a pickup in Saudi domestic demand, which will reduce their export into the start of the year, and that potentially will also help tighten the market a bit. So overall, still looking for well, you can't call oil an uneventful year because I'm sure that's not going to be the case. There will be a lot of events, but looking at the supply and demand right now, a $80 to $90 or Brent crude looks to me like a decent range to focus on.
Let's also talk about the commodities within the agri space, and there have been conversations about El Nino. We saw sugar, rice, wheat, cocoa, coffee hit multi-year highs. How are you reading the agriculture as a sector and the global demand going forward?
Well, it looks like we've had a bit of a north-south divide this year. The grain market has been doing poorly because production has been exceeding expectations across the northern hemisphere, both in the US and Europe. And then we have some of the softs you just mentioned: cocoa, sugar, coffee prices, all rallying quite strongly recently, even though there has been some profit taking as well. And it highlights the weather-related impact on some of these crops on the southern hemisphere. And we're probably going to, as far as we can see at this point in time, probably going to expect more of that next year. So I think the focus in terms of prices staying supported will continue to be some of the soft commodities, and then we'll have to see how the harvest in South America, which is also at this point in time getting a little bit challenged, how the outlook for soybeans and corn looks after the South American harvest. So all in all, a year where I don't see much further fall in prices, still with the risk potentially pointing to the upside for any weather upsets that might occur.
Oh, well, absolutely. The best of gains actually were seen in case of sugar, up 30%, and coffee and cocoa between 30 to 70% of gains there as well. And that is where perhaps the concerns could be in the next year as well. Ole, as always, thank you so much for joining us here at CNBC TV18 with a sense of all of those commodities. But with that, it's a wrap on this edition of Commodity Champions. Thank you for watching.